Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 21st. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. I'm here to teach you guys some different strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data here today. Across the pond, not really a whole lot to see here. We do have several Fed governors speaking today. We've got Claire Ida, which he is speaking probably at in about an hour here. And then we also got existing home sales, which came in at 5.19 million units, expected to be 3.35 million units. Actually, the Fed governor was speaking yesterday. Sorry about that. I thought I saw, Evans is speaking today right about now. So we've got that going on. Okay, existing home sales coming in a lot lower than expected. 5.19 million units, expected to be 5.35 million units. That is a cause for concern, right? We need to keep our eyes out for this. One thing this last weekend, I was talking to a realtor friend of mine, and he said that millennials don't like buying used houses. So existing home sales, we could start seeing some of that with millennials not buying some of those homes because they want to get into a brand new home. So just something to keep an eye out for. Not a great economic data point though there. That number we would like to see a little bit higher, especially with interest rates coming off a little bit. We've seen the bonds rally. I've talked about it. They've kind of overextended to the upside, which means that interest rates are going down. If interest rates are going down, that allows you to buy more house for the same amount of money on your budget. So existing home sales going down when we're seeing those interest rates for mortgages and stuff like that go down is not always a great sign. So we're going to watch that one pretty closely. All right. Crude oil is back above that 23 Fibonacci area that we've been talking so much about. It is acting as support and or resistance. Now, we've talked about this quite a bit now. We're looking at this market kind of build up in and around. I want to see this market fall back below this Fibonacci, this 63 Fibonacci right here, where it lines up with, or actually it's the 23 Fibonacci, but it lines up with $63 a barrel. I'd like to see this break down below here and start filling in some of this area right here. That to me, not only filling in this low volume area, making this market look like a nice big market profile where it's, a nice standard deviation curve, if you will. That and the fact that we get this lower interest rate or this lower dollars per gallon, allowing us to create velocity of money, also helping the economy. So, I believe this technically that it's going to want to come back down to this 58-ish area. $58 a barrel, I think, is where we're looking for. I don't know what the symbol for barrel is, to be quite honest, but that I think would be nice for the economy, and I think that it needs to come down and test this support area here as well. So I think that that is going to be a target. I'm not necessarily going to play that one, but I do believe if you are looking at crude oil, we've seen this market rally up, and we're looking for a bit of a correction, and a nice correction would be right to this $58, $59 a barrel area. Break through that $60 psychological level is what I'd like to see here. And then we move over to gold futures. Remember I put on a GLD trade. Today we got this trade coming off, broke below some support areas that we were looking at. I did this trade based on the fact that I thought we were going to hang around this point of control and volatility would come out of that trade. So that is what we did. Remember, I kind of bent the rules a little bit on my rules for creating short strategy, short premium selling strategy, which is what I did here. The implied volatility wasn't super high, but we did get in that at the right timing, so that worked out quite nicely for us in GLD. So I'll talk about that trade a little bit more when I pull up the platform or the the chart for that. But as you can see, we broke below support yesterday. Today we got a nice big sell-off, and I was well over 50% of my max profit, so I decided to take that trade off. But again, I'll talk about that a little bit more in a minute. All right, bonds coming off, and this is what I was talking about with the this entire month. We've seen the bonds go up, which means that interest rates are going down. So this is on your 30-year, right? This is what we would look for a 30-year interest rate. Well, we saw those interest rates go down during this time here, which is the time that we were talking about for our existing home sales. So the existing home sales here went down as well. So we would expect people to be able to buy a house because they can get a bigger house for the same amount of money. With interest rates lower, your mortgage payment will be allowing you to buy a bigger house because that money's not going towards the interest on that. So not a really great sign. We would have thought that people would have probably come off of the sidelines in order to buy some houses with the interest rates lower. If you're out there shopping and all of a sudden you see this lockstep go down, you might want to be locking in that mortgage rate. All right, VIX still coming off by about 1.5 points. Nice to see we're still in the teens for these earnings. Got a couple of earnings coming up today that I'm going to be looking at as well, aside from taking off that GLD trade. But Dow Jones Industrial Average up over 130 points. Looked like we came down, tested this point of control, and are starting to rally again. Now, this is that spot with the NASDAQ that I was talking about. This 7450 area is not going to act as a support or a resistance. I think it lines up too close with the point of control. As a matter of fact, it's more like a magnet. It's going to want to hang out there. So I think that this Fibonacci right here is not really going to act as much of a support and resistance, and may even just remove that altogether. I like the fact that it lines up with the point of control though. So if you can see, I like to have my Fibonacci's come in line with the market profile, because I believe the market profile gives the psychology of the market, and the Fibonacci gives us a little bit more detail as to where those support and resistances are lining up, because that becomes a psychological kind of thing going on. All right, let's get over to the E-mini S&Ps. They are up on the day by about 20 points as well. Again, we've got this nice little move here. The one thing I'm worried about is we've gotten this big, huge move here. We've come down. We're getting a bit of a bounce, but we could see that bounce drop back down again. So I haven't started adding a whole lot of bullish strategies to my portfolio, because I still believe that we are going to come back down and maybe even test this area here. So as a target for the E-mini S&Ps is going to land somewhere right around 2750. Okay, so I think that we could see this market come down to that 2750 area. All right, just to get a little overextended to the downside at this point. Hopefully I'm not becoming too bearish too late. All right, overnight inventory gets really long, as you can see here. Maybe a little bit of flush out, but for the most part we got long over the entire course of the night. We can see we opened up right here, and the overnight inventory started out here, which means it is overly long. Now, we talk about this a lot of times. During the day session, this market is going to want to roll over and print this low in before we get any kind of bounce higher. It doesn't feel like we're trying to flush those guys out right now. It just feels like the market is starting to trudge higher. We've had some pretty decent earnings coming out, so that could be the catalyst that's driving us here. We're even seeing like Lowe's really rally hard ahead of their earnings as well. All right, GLD. This is that trade that I was talking about, and we put this on the 14th. So we got this doji right here on the 13th, and then confirmation on the 14th to the downside. That's what I was looking for in this trade. I thought that, though, after we rallied here on this move, that we might just kind of settle around this point of control here, right along in this area. I thought we would kind of ping back and forth. We did get a little overextended to the downside today, breaking below this 61 Fibonacci, which lines up with 120 here in the GLD. So, my plan was to short this out using the June 125 calls. So I sold the June 125 calls in here for 70 cents. Right there on that confirmation. We got the directional move. Now, I was just looking for the implied volatility to come out as we kind of settled down around this. So this is where I was talking about where I broke my rule a little bit. We are looking for the IV percent on this type of strategy. If I'm looking at an IV percent of less than 30, okay, so less than IV percent of 30% here. So this was not fitting that rule, as you can see here. But I did expect the market to come in and around this. This is one of those yellow lights that I talk about. So definitely had to have the market settle down, volatility coming out, or my directional move. I got both of those. As you can see, we got the directional move. I got my directional move down on those, and I also got this volatility coming out at the same time, which worked out perfectly for this strategy. So in those, the June 125 calls that I sold, which got me way up here above this Fibonacci, or sorry, this value area high, which, you know, that's where it starts getting a little overextended. So I was allowed to get up there for about 70 cents, and I bought those back in today for 14 cents. So, or sorry, 15 cents. So out of that trade there for a nice little profit. Like I said, it was a little bit better than 50% of my max profit, but we got that big move down today right off the open, and that allowed me to get out for a lot better. It was pretty close to 50% of max profit, but that move, volatility, all of those things coming together, making that strategy work out quite nicely. And then finally, this is a trade that I'm looking at right now. I was really talking, I saw it yesterday, Kramer, sorry Kramer, love you buddy, but came out and started talking bad about Tesla, and some other people saying, you know, Tesla, it is worth $10 a share, if nothing else, and it's at least worth $10 a share. All of these things culminating right around this chart setup right here that we can see, this doji down here. Anytime you get that massive doji like this that we got, that usually means a bottom, especially at a big move lined up with the one the Fibonacci right here. So all of those things just made me really bullish. The contrarian, I even tweeted out at Kramer's article that it was capitulation. So we're looking for that market to move higher. I'm looking for it to trade above this high here, and probably going to be putting on a call spread. We don't have a whole lot of high implied volatility. I think that if we start getting a rally, I'm going to be able to see that trade come in on a move back to the value area low is kind of where I was thinking when I was looking at building up a strategy. So long call spreads, what I'm going to be looking for this bullish move, if we can get confirmation on this upside here. All right, that's about it. Those are the things that I'm looking at. There's also for earnings. Earnings today, we have, let me see, earnings. We have Lowe's, which I'm going to be looking at, and Target. So those are the two trades that I'm going to be looking to implement for earnings today. All right, that's all I got for you guys. Other than, if you can't take that, take it easy.